Ladies and gentlemen, good afternoon. We are delighted you could join us for BluOr Bank investor call. The purpose of this meeting is to provide you with an overview of the company, its strategy and development plans in the light of its expected €7 million bond issue. We will start with a presentation by the company, followed by the Q&A session. You're welcome to join the discussion and ask your question to the company by typing it in the Q&A underneath the presentation. This call is hosted by BluOr Bank Chief Financial Officer, Dmitry Ozernov.
Hello, everyone.
And Dmitry is accompanied by BluOr Bank Chief Investment Officer, Miklasevics.
Hello.
With this, gentlemen, I'm passing it over to you.
Thank you very much, Eva, and thank you for everyone who has tuned in and everyone who will be watching this on replay. We know how important and valuable your time is, and we appreciate you joining us today. And we're here to tell you about BluOr Bank, and as pertains to our bond issue, which has already actually been started. The subscription period has started already today and will be available up to and including the close of business on May 27th. Today's presentation, first of all, a disclaimer: this is not a solicitation to sell. This is for informative purposes only. And if you have any questions, please contact us. But we'll ask you also to refer to our base prospectus, which has all the information that is necessary for any investment decisions. I will be guiding you through our presentation today, and we also have Dmitry Ozernov, our Chief Financial Officer, here with us today, and he'll be able to go through any specific questions you have pertaining to our bank's balance sheets or pertinent financial questions. Our agenda: we'll start with an executive summary, and then an overview of BluOr Bank. We'll follow with our business environment, followed by a financial overview, selected financial information, the bond terms, risk factors, and contacts. Executive summary: we are a corporate lending bank. The bond program that's been approved allows us to issue up to 15 million euros, maturity of 5 to 10 years, and that would be non-callable in the first 5 years. It will also have a fixed coupon. The terms that we have agreed on and that we are issuing as of today are 7 million euros with a 7% coupon and a 7-year maturity. BluOr Bank is a privately owned Latvian bank focused on corporate lending. We have a successful strategy track record and are well positioned for future growth. We have a solid capital position and asset quality, and a sustainable business model with continued growth in our performing loan book and new loan issuance. We have a very strong liquidity position and diversified sources of funding, as well as a smooth maturity profile. We also have a very conservatively managed investment portfolio. In terms of the rationale and use of proceeds, they're intended to strengthen the capital structure of the bank and to retain a strong capital base in light of a growing risk-weighted asset base. It also further diversifies our capital sources and investor base. And this will also serve, of course, to strengthen other key financial metrics. And at the end of the day, it increases our lending capacity. We have the ability to source funding that is only restricted by our capital. And through this issuance, we'll be raising our capital and increasing our loan book. Now for a brief overview of BluOr Bank. The bank was founded in 2001 by 4 private individuals. The bank originally focused on corporate loans for the shipping industry. BluOr Bank has maintained high liquidity over its operating history and even remained profitable during the great financial crisis. Today, BluOr Bank is a modern financial company offering a full range of banking services: daily banking services for corporate clients and individuals, loans to small and medium-sized companies, asset management, and brokerage services. Over the last 5 years, BluOr Bank has successfully implemented a new business strategy that targets corporate clients in Latvia with a focus on providing lending services. The new strategy significantly lowers AML and compliance risk levels due to non-resident corporate balances having been replaced with retail deposits as the bank's primary liabilities. With corporate loans as the main product and funding from deposit platforms, BluOr has a scalable business model that allows for business growth without incurring additional administrative expenses. BluOr Bank issues loans to strong businesses with sufficient collateral, thereby keeping credit risk at an appropriate and manageable level. BluOr Bank builds relationships rooted in expertise, transparency, and trust. Our bank was founded in 2001. It is a 100% local capital bank, which means that we have a very good purview of what is going on in the Latvian economy. Our core focus is corporate accounts, lending, and wealth management. As our customers become more successful and they increase their loan books, they also have money available for services such as asset management and broker services. We are the 6th largest bank in Latvia and are one of 5 systematically important financial institutions. 98% of our clients are based in the Baltics and the EU. BluOr Bank advantages. Reasons for choosing BluOr Bank. BluOr Bank is a bank with local capital. We have a deep understanding of the local business environment. We have a flexible approach aimed at win-win outcomes. We care about helping our clients, not just financing them. We are able to conduct individual risk assessments, and we cover a wide range of industry sectors and clients. BluOr Bank is a choice of manufacturing companies, retail trade companies, real estate developers, hospitality businesses, seaport terminals and forwarding agents, business people as private clients, and transportation and logistics companies. We seek to empower businesses in the Baltics and Europe. We help businesses scale and grow through investment loans that allow for the purchase of fixed assets and development, loans for working capital, such as credit lines and overdraft, factoring and financial trade operations, and documentary operations, such as bank guarantees, letters of credit, and documentary collection. If you take a look at our numbers at a glance, we are showing stable and actually impressive growth through our balance sheet in terms of our loan growth, our asset growth, deposit growth, and our equity is growing as well. In terms of key financial ratios, investment highlights, we have a CET1 ratio of 16.56%, a capital adequacy ratio of 16.63%, a leverage ratio of 8.9%, a liquidity coverage ratio of 166.9%, and a loans to deposit ratio of 48.5%. My apologies. All these measures show that our bank is managed very conservatively, and we intend to keep things that way. In terms of financial assets, our total assets now stand as of the end of December 2001 at 875 million euros. Gross loans are at 344 million euros. Customer deposits at 710 million euros. Shareholders' equity stands at 75.1 million euros. And our net profit last year was 9.4 million, which is actually more than the issuance of this current bond. In terms of medium-term financial targets, we are well prepared for further growth. We intend to maintain a comfortable buffer of over 200 basis points above minimum capital requirements. Our cost-income ratio will be held below 60%. It's currently at 51%. Net interest margin, we intend to keep our net interest margin between 2.5% and 3%. Return on equity is currently at 13.3%, and our target is to keep it above 10%. In terms of operating income, last year's operating income was 27.4 million euros, and we hope to achieve a balance of over 25 million euros a year going forward. Again, the main takeaway from this is that we are focused on delivering sustainable performance in the future. In terms of our management team, it's the past 5 years or so in the Latvian financial sector have been very challenging. There's been a lot of new changes that have had to be implemented, most specifically from an AML and compliance perspective. And I would just like to commend the work done by Inga Preimana and Igor Petrovs in this respect. They have done a fantastic job. It's not something that is always at the forefront, but that our compliance team is second to none. They do amazing work. And also during COVID, we saw the strength of our technology component of our business, and that's thanks to Andres Lavrinovic. We had a lot of people working offsite, and the service level provided by our technical team was second to none. And in terms of our finances and our financial risk monitoring, Dmitry is with me on the call today, but also Pavel's do a fantastic job in making sure that we are well above any buffers necessary in terms of our financial controls. And throughout this period of change, and also the change of our strategy, a huge role has been played, of course, by our chairman of the board and Dmitry Ozernov. His gravitas and steady hand has got us through significant change. And he's been helped by the work of Dimitris Feldmans and Alexeis Peshkovs, who have provided considerable vision and energy in terms of building our team, keeping it motivated, and configuring us for further growth. So I'm proud to be a part of this team. I manage our asset management business, and if you have any questions, please let us know. For our shareholder structure, we are a family banked. We are owned by 4 individuals and their families. 81.06% of BluOr Bank shares are indirectly held by Sergei Peshkovs and Alexander Peshkovs and their family members. We are a family bank that is not reliant on the next quarter's KPIs, but is looking to build generational growth. And I think that that's something that's very attractive to any investor. Business environment. The Latvian macro environment is recovering after a challenging period. It's no surprise to anybody that COVID provided several challenges. More recently, with Putin's invasion of Ukraine, there has been a new host of challenges. But Latvia's economic growth has been above European trend growth since the Great Financial Crisis. We actually held in better than most countries in the EU during the crisis, and we have emerged with strong growth after the crisis. Latvia's government debt to GDP levels are at a very manageable level, especially compared to other countries in the Western world. Our unemployment rate is holding at very low levels, despite an uptick during COVID. And inflation is a phenomenon that's appeared everywhere around the world. Russia's invasion of Ukraine has caused destabilization in world asset markets and commodities markets, and that has showed up in inflation as well. The Latvian GDP forecasts for growth in 2022 and 2023 are 1.8 and 3.2% respectively. And we expect that government debt is expected to remain below 50% in the medium term. The Latvian banking sector. Total gross assets of Latvian commercial banks were 25.5 billion euros as of the end of 2021, while assets in the top 4 largest banks amounted to 81% of the total banking industry. BluOr Bank is the 6th largest bank in Latvia with total assets of around 890 million euros at the end of 2021. And this amounts to 3.5% of the total assets in the Latvian banking industry. BluOr Bank has been named as one of the 5 systematically important financial institutions in Latvia by the Latvian Financial and Capital Markets Commission. Here's an overview of the banks in Latvia. If you have any questions, please let us know. As you can see, in terms of growing our loan book, we have considerable runway, and we hope to continue to grow our loan book going forward. Financial overview. Here's a picture of our financial results. Most indicators meet or exceed our most recent financial plan. The impact of COVID-19 on our asset quality has been limited. Operating income was 27.4 million euros in 2021, which is an increase of 34% year over year. Audited net profit was 9.4 million euros in 2021. And the bank participated in ECB TLTRO auctions in 2020 and 2021 and borrowed 75 million euros and 7.7 million euros respectively. The bank has met loans growth eligibility criteria, and the TLTRO effective interest rate was -1%. Our capital position is well above requirements, and the bank continues to operate with an adequate capital ratio. At the end of 2021, the bank's CAR was 16.6%. The bank's assets increased by 166 million euros in 2021, which was a 23.4% year-over-year increase. BluOr Bank raises stable funding through deposit platforms that provide a cost and process efficient resource base. Total customer deposits exceeded 710 million euros, which was an increase of 167 million euros, or 30.8% year-over-year at the end of 2021. The loan portfolio is currently 344 million euros, which is an increase of 41 million euros in the last calendar year. Our primary goals are to continue organic growth in our local market and to generate a return on equity above 10%. And as you can see from our financial data, our interest income continues to increase nicely. And there was a dip in our fee commission income in 2020, but we have been recovering since. And this reflects the change in our business model that is more focused on loan growth and interest income increases. Capital requirements, we have a very healthy buffer in terms of our capital requirements. Our CAR is at 16.6%. We continue to operate with adequate capital and efficiency. In addition to CET1 capital, BluOr Bank has issued additional Tier 1 instruments in the amount of 1.1 million euros in 2021. I believe we're the first bank in Latvia to do so. A new additional capital buffer, P2G 2% and OSS1II is 0.25% will become mandatory in 2023. We have included a provisional estimation of the potential requirements. Again, I will ask you to address any questions that have to do with capital requirements to Dmitry's. They'll be very happy with your questions, and they'll be available in the presentation for deeper scrutiny. Income structure. We have an ongoing transition from a fee-based model to a loan book as core business. Interest income in the loan portfolio is projected to grow at 20 to 30% year over year as a result of organic growth and new loan issuance. Commission income decline is attributed to decreasing income from closed accounts, a lower amount of payments, and a continued shift from a fee-based model to an interest income model. Management expects commission income to stabilize at the current level on a forward basis. Commission fees are well diversified across products, and the new 15 million euro subordinated bond program will ensure a more efficient capital structure for future growth. Our goal is to ensure operating efficiency by holding our cost to income ratio below 50% from 2023 onwards. Costs. In the previous slides, you saw that our assets are growing, our loans are growing, and our income is growing, but our costs are staying pretty much flat. This has to do with the fact that we've built a stable base from which we can grow. The bank was able to keep administrative expenses at a stable level despite the significant increase of total assets and growth in our loan portfolio due to the following initiatives: review and reduction of non-essential costs, automation of processes, labor force adjustment according to changes in business lines. COVID-19 also had a limited impact on administrative expenses, and the bank was able to effectively set up remote work processes. A number of client servicing personnel and the ability to provide service via digital chat, a reduced number of client servicing personnel, my apologies, and the ability to provide service via digital channels also led to smaller COVID-19 financial impact. Balance sheet structure. We have a conservative and stable loan to deposit ratio that enables continued loan growth. As of December 31st, 2021, there are 345 million euros in term deposits, of which 289 million euros are from deposit platforms. More than 80% of term deposits are from private persons. Looking at our loan deposit ratio, we have a very conservative loan deposit ratio currently of 48.5%. Funding structure. Our funding structure is diversified and stable. The bank was funded mainly by deposits. We have a successful cooperation with the deposit platform Raisin DS. This allows us to take deposits from customers all over Europe. The bank plans to diversify funding sources in the future. The zero rates market environment reduces deposit costs and improves our maturity schedule. We received funding from the ECB TLTRO program in the amount of 75 million euros in 2020 and 7.7 million euros in 2021. Loans. We have a well-diversified loan portfolio that reflects all aspects of the Latvian economy. We have been building this loan portfolio, and our performing loans increased by 87 million euros during the last 24 months. All of the grace periods granted to corporate clients in 2020 due to COVID-19 have expired, and clients have returned to their original repayment schedules. Our goal is to sustainably keep the costs of the credit risk below the 1% level. Lots of banks will talk about ESG requirements and as a big part of their marketing plan. We literally put our money where our mouth is. One of the companies that we have financed recently is Lat Eco Foods, or otherwise known as its brand name of Rudolph's. This is a company that was created by a mother wanting to give the very best to her child. And so in terms of our loan quality, we look at businesses that are sustainable, that contribute positive to society, because it's not just good for our bank, it's good for society, and it ends with win-win propositions all around. Loans, growth in targeted segments. Our loan book continues to grow in 2021, increasing by 14%. The trade finance segment and operational real estate segment remained stable. The retail and wholesale and real estate development segments both increased by 12 million euros. Geographically, more than 80% of the loan book is issued to clients from Latvia. Substantial recovery in client activity occurred in the second half of 2021 with the increasing demand for refinancing. Our average loan duration is 2.5 to 3 years, and we are confident of achieving our target of double-digit organic growth going forward. Investment portfolio. We have a prudent approach to risk, and our investment portfolio is currently around 184 million euros. This is a portfolio of debt securities. If you look at the ratings, the vast majority is in AAA to A- ratings. The majority is also in EU countries and in sovereign paper. And if you can see by maturity, we have a very low duration in our investment portfolio. Selected financial information. Here's a look at our balance sheets. I will put some emphasis on the fact that we are very liquid. We have 270 million in cash and demand deposits with the Latvian Central Bank, another 34 million in demand deposits with credit institutions, and our investment security portfolio is 185 million. And as you can see, we have also had substantial growth in our assets, from 521 million in 2019 up to 875 million euros in 2021. Now we'll talk about our bond issue. The bond terms, as mentioned previously, the first tranche of the bond, the one which is available to investors as of today, is 7 million euros. We have the right to expand this up to 10 million euros if we choose to do so. The coupon on this bond will be 7%. It'll be paid quarterly, and the maturity will be 7 years from now, June 1st, 2029. The minimum amount is a nominal of 1,000 euros, and the issuers are Redgate Capital, Signet Bank, and Evernord UAB FMI. If you have any questions about the bond offering, please let us know. All the information will be available in the base prospectus. Important risk factors. There's of course strategy risk. There is a risk that we will not be able to execute our strategy. Credit risk, we deal with counterparties. There is the possibility that they will not be able to meet their obligations to us, the issuer. We also face capital adequacy risk, liquidity risk, operational risk, concentration risk. That being said, in terms of concentration risk, the more we're able to lend, the more we can diversify our lending portfolio. And of course, market risk is involved in everything that we do. Key risks related to the bond specifically, there is price risk. The price in the secondary market may change significantly. Neither the issuer nor any persons undertakes to maintain a certain price level of the bonds. It is our goal to list this bond on the NASDAQ Baltic Bond Index. That process will be initiated as of the closing of the bond issue, but we have up to 3 months to do so. Again, all this information will be is contained in the base prospectus. Credit risk, an investment into bonds is subject to credit risk. Liquidity risk, there's no guarantee of a second market in these bonds. Bail-in risk, the bonds may be subject to write-down or conversion powers in accordance with the Bank Recovery and Resolution Directive. As owners of bonds, you have no ownership rights. An investment into the bonds is an investment into instruments which do not confer any legal or beneficial interest in the equity of the issuer or rights to receive dividends or other rights which may arise from equity instruments. There is also subordination risk. These are unsecured subordinated bonds. There is tax regime risk, legislation risk, and also early redemption risk. We have the right to redeem the bonds after 5 years of issuance. In the presentation, there's a number of abbreviations as you go through. Please refer to this page if you have any questions. And I would like to thank you for your attention. And we'll now open up the floor to any questions you might have. Again, I'm Miklasevics, the Chief Investment Officer at BluOr Bank. And I also have Dmitry Ozernov, who's our Chief Financial Officer, with us here. And he's ready for any and all of your questions. Thank you very much.
Thank you, Pauls. We have received a number of questions. And just a reminder that all questions are welcomed. Please use the Q&A section that you can see underneath the presentation. To start with the first one, what capital adequacy ratio bank plans to have after BluOr Bank subordinated bond issue? What is the regulatory requirement now? And what is the expected requirement for 2023?
Okay, as you have seen in the presentation, the current requirement for capital adequacy ratio is about 13.5%. And in 2023, we expect that the requirement will be approximately at 15.75%. So our long-term target is to have capital adequacy ratio from 16 to 17%. And say at the moment we have capital adequacy ratio above 16%. And after the issue of the subordinated bonds and after the planned growth of our loan portfolio, so we plan to keep the capital adequacy ratio at the approximately 16.5% level. So it will be above all the new requirements. It will be above our, let's say, internal assessments of the necessary capital, and it will include sufficient managerial buffer.
Thank you. How BluOr Bank is unique if compared to other Latvian banks?
Yes, we can say that we are unique because we are offering an individual approach to our corporate clients. And let's say we are ready to go into details and to work with a mutually beneficial conditions. And say we are ready to know our clients and what are we doing.
Yeah, if I could just add to what Dmitry mentioned, we put a very high priority on relationships, and we intend to grow our loan book through financing our existing clients, not just adding new clients. We also see that in our asset management department, where we have clients that have been long-standing, that have had nice returns, and that have also invited other clients to take part in our services. So we put a large emphasis on relationships. Again, we are a family bank with 100% local Latvian capital, which is different if you compare that to other banks, which are large Scandinavian banks or owned by U.S. private equity. We are here, and we have a very vested interest in helping to grow the Latvian economy, for our clients to be successful, for our bank to be successful, and to Latvia to be successful.
Thank you. What will be the allocation principles for subscribed bonds in case subscription amount is exceeded?
So you can find the final terms, the allocation principles in the final terms, but we have right to increase subscription amount to 10 million euro. So if we will see the other subscription, we are ready to take additional 3 million euro. And in general, all our details in the final terms.
Thank you. Bank's loan book has a significant weight on real estate. Is it comparable to your competitors, and how risks related to the real estate are being mitigated? So
first of all, as you have seen, our loan portfolio structure, it's just less than 1/4 real estate loans, and we are very careful with let's say projects we are financing. So we accept only healthy projects with like sustainable financials, with a very conservative loan to value ratio, and with like from clients with significant experience in this business. So I would say that our real estate part of loan portfolio is well positioned, and like we see no any significant risks from this one.
Thank you. What is the direct impact on BluOr Bank from Russia's invasion of Ukraine?
So historically, had very limited exposure on CIS markets, and we don't have any direct exposure on issuers or companies from Russia or Ukraine. So we don't see any like direct losses from impairments to the loans. In general, as we are doing loan business in Latvia, so our exposure is like approximately the same as the overall exposure of Latvian economy to the current situation. And I would say that the impact in financial terms is very limited and manageable.
Thank you. And currently the last question that we have received from the audience: any disclosures regarding the current AML status and fines previously imposed by the regulator?
Since 2018, we have successfully redesigned our internal control systems. And according to the last inspection from FCMC, it's resulted in no any actions or fines. So I would say that last inspection proved that our AML systems are in line with all requirements and rules.
And I will just add to what Dmitry already commented on. Latvia has faced probably the most intense transition from an AML and compliance perspective of almost any country in the European Union or on Earth even. To be listed as one of Latvia's 5 systematically important financial institutions means that we are in compliance with what are probably the strictest AML rules in the world. So from the perspective of previous fines and so forth, we have to state that we have a clean bill of health, and we have very rigorous AML and compliance standards, and we only intend to maintain these standards to the very highest degree.
Thank you. All questions are now answered. We have recorded this session, and the recording will soon be available on BluOr Bank and also Nasdaq Riga web pages. Thank you for joining us today. Have a nice afternoon and successful investing.
Thank you.
Thank you very
Have a
much.
nice day.